Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. A special video here because many people keep asking me a simple question all the time, and that is that what can we follow if you don't know the charts, if you don't know technical analysis, what can we follow to ride the current cycle for the next 3 years? And I have to keep telling them that as long as you've got two qualities, then you can use these two magical indicators, which I'm going to show you today, which will help you to not only ride the market for the next 3 years, but also with a very high degree of probability, find the top of exactly where you need to just get off. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, get a notepad because you need to make some notes on here, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. Nothing should be taken as financial advice, so please do your wider research before you make any investment decisions. So what can we do to follow the market without making expensive mistakes? The answer I always say is that, well, you've got to have in return two major qualities. And as long as you've got these two major qualities, then you'll be able to ride this market all the way to the top with a very high degree of probability. The first thing I want to start off with is this quotation, which is an absolutely amazing quotation. And that says that there is nothing that is more expensive than a missed opportunity. And what we have with Bitcoin and the cryptocurrency space, and that includes the Bitcoin miners, is a wonderful opportunity which keeps presenting itself over and over again. And once again, we've got another opportunity that's presenting itself potentially in the next 2 or 3 years. So as long as you've got patience and perseverance and you've got a good attitude towards investing, then I'm going to show you two magical indicators and you're going to be blown out of the water with this. And you've got to use these two indicators in conjunction with each other. So you'll be able to ride the market up to the very, very top and then use the second indicator to know exactly when to get off the Bitcoin train. So I'm going to start off here. Back in 2011, if you look at the blue line, and it's the indicator I've shown you many times, it's the 8 EMA. It's an absolutely magical indicator, and you really need to have this on your chart. So right from the beginning, you can see quite clearly the price action on the weekly chart here follows the 8 EMA to a T. And that was all the way up to the first bull market run in the first cycle that we had. So what the 8 EMA did was it helped people to ride the market right to the top. At this time, of course, nobody knew that this was going to be repeated over and over again. But with the benefit of hindsight and the history now that we have, we can now utilize that for our advantage going into the next 2 or 3 years. And notice one thing down here. The RSI went below the 30, which now, with hindsight, tells us that that was the actual bottom of the market at that time. So the Bitcoin price kept riding the 8 EMA, as you can see quite clearly here, up to another cycle top. Then we went into this bear market and actually ended the cycle here in November 2013. And all along there, we used the 8 EMA. And the reason why I've got the 21 and the 34 is that you can use those as guides as not to get actually shaken out of the market. Because you'll notice one thing, that when we do lose the 8 EMA, we do tend to find support either on the 21 EMA or the 34 EMA. And this is a sign all the way through right up to the current Bitcoin price. So as you can see, the 8 EMA has actually allowed you to ride the markets all the way up to the top. And obviously we've lost the 8 EMA here, we've lost the 21 EMA here, and we've lost the 34 EMA here. And the second indicator I'm going to show you later on, you'll realize that actually you can get out of the market virtually at the very, very top before you even see this decline over here. But if we continue our theme of the 8 EMA and the RSI over here, as you can see, we bottomed out over here. And once again, the RSI was below the 30 here. And I've shown you in many of the last videos, I've been showing you many signs of what to look for, which have shown you very strongly about the end of the bear markets. And these are just other signs that I'm showing you now. Obviously, we went to the RSI 30 here, and that's why you can't use one indicator to tell the full picture. You have to use a conjunction, a confluence of many indicators to build up a picture of exactly what's happening. So up to now, we've got to the end of the first cycle. We've used the 80 EMA to get to the top, and then we've seen that it's bottomed out here after the market's gone below the RSI 30 here. If we continue to the next cycle, you can see that once we navigated out of that bear market bottom over here and recaptured the 8 EMA, we once again followed it all the way up before the halving, which is the pink line here, using the 21 exponential moving average as support once we broke the 8 EMA. And after the halving, as you can see here quite clearly, we continued to use the 8 EMA as our guide with the 21 as support, and we used the 21 all the way up to the top. And we only came to the 34 EMA once here and possibly once over here. But until then, it was all 8 EMA, and if you just follow the 8 EMA, you will get to the top of all the cycles. And if we continue further, you'll see that the RSI once again fell below the 30 here. That was one of the signs that we'd bottomed out. And once we'd bottomed out and we recaptured the 8 EMA once again here, we followed the 8 EMA and used it as support all the way up to the 14,000. And this time it didn't even come down to the 21 or the 34. Before we got to the halving, we lost the 8 EMA, the 21 and the 34 over here. So it's not absolutely perfect, but once you have bottomed out at the end of a bear market over here, and you're in it for the next 2 to 3 years, you just have to hold firm. And the second indicator I'm going to show you will help you to do that. So it doesn't really matter if you lose the 8 or the 21 or the 34 EMAs. As long as we know that we've got a 2 to 3 year timeline, we should be able to hold firm. And this situation here was the COVID situation. So it was quite a one-off thing that doesn't always happen. And we have to ask ourselves, what is the probability that we're going to have another COVID situation in the next 3 years? So we can see quite clearly that if you'd have stuck to the 8 EMA after we'd bottomed out over here, that was shown by the RSI dropping below the 30 once again here. If you'd have held on to the 8 EMA as a guide, and in conjunction with the second indicator, you'll realize that you wouldn't have got out over here anyway, and you'd have been able to hold firm because you needed patience and perseverance. So if we continue our journey here, so we got to the halving here in May 2020, and once again, once we got back above the 8 EMA, we rode this all the way up to the $64,000 mark over here. And we only needed the 21 EMA once over here and possibly once down here. So once again, the 8 EMA was the thing to ride. And we are once again, as you can see here now, this situation we've reached our RSI 30 here. We've seen many signs over the last many videos now that we seem to have bottomed out over here with a high degree of probability. We've now recaptured the 8 EMA over here, and we're right at the beginning of the next bull cycle, if these charts are to be followed from 2010. And as we've seen, once we recapture the 8 EMA after bottoming out over here, we should be able to use this all the way up to the halving in 2024. So the halving is going to be around about the April-May 2024 time, and we should have a very good run up to that point by using the 8 EMA. And then what happens afterwards, you may get chopped up a little bit here, but if you've got a timeline of 2 to 3 years and you've got patience and perseverance, then you really don't need to get chopped up. You've just got to be patient and persevere and just keep following the 8 EMA. Yes, it'll fall down below it, because that's what the history tells us. And we must hold firm until the next indicator, which I'm going to show you now, tells us when to get off the Bitcoin train. So this was the first indicator. It's a very simple indicator to actually follow and ride the Bitcoin train all the way to the tops of these markets here. And what we found was that once we get to the top, then the only support, even if we do break the 80 EMA, you'll find the support on the 21 or the 34. So the question now is that how do we know we've got to the top over here and to get out before the Bitcoin price falls below the 80 EMA, the 21 EMA, and also the 34 EMA? How do we know when to get off? The second magical indicator that we need to use for the next 2 to 3 years to help us to get off is an indicator I've been showing you all the way through the last couple of years, and that is the pi cycle. So the pi cycle is made up of the red line and the green line. The red line is actually the 111 simple moving average, and the green line is the 350 simple moving average. So within the first cycle, we got this first top over here. And obviously we didn't have the benefit of hindsight, but if we actually look at the trajectory over here, you know that it would have crossed around about the same time as where the top was here. And you wouldn't have known that at the time, but now we've got the benefit of hindsight. We know that this would have been the case. And if we move towards the actual cycle top at the end of the 4 years over here, having ridden the market all the way up on the 8 EMA, finding support on the 21 and the 34, we actually crossed twice over here within the first cycle. So before we got the actual crossover here at the end of the first 4-year cycle in November 2013, we already had another crossover here, and that was marking another top over here. So you could have actually, in the first cycle, if you had the benefit of hindsight, you could have actually had 3 tops where you could have actually taken profits and rode a bear market afterwards down here. So now we know that in the first cycle, if you'd have followed the 80 EMA and ridden the market up, and then when we got to the top where the crosses occurred, if you got out, then you would have actually maximized the benefit from Bitcoin during those times. So if we move to the next cycle, you can see quite clearly here, which was in December 2017 here. And once again, you can see quite clearly the 111 crossed exactly at this point where we topped out at 19,800. So this was now our 4th point of these 2 averages. And many people keep telling me, well, these are historical indicators that they created at this point. It doesn't really matter when they created it. The fact of the matter is that they work. And if they work, and we can use them for our future, then why wouldn't you do that? Especially when they're showing you very accurate predictions of the tops of the markets. So we can see quite clearly again, for the 4th time up to 2017, this indicator was telling us exactly where the top was. And if we move forward, once we got to this point here, and that was at exactly $64,000 mark here, it crossed. And this was our first top in April 2021. If we had just got out of the market based on this indicator, having ridden the market up on the 8 EMA, yes, we would have missed this part over here, the $69,000 mark, but then we wouldn't have had to ride it all the way down over here. Because once the line separated, it's telling us that the market has actually topped. And technically, this was the top actually, although practically this went a bit higher than the previous one. But what are the probabilities of this happening again in the next 2 to 3 years? I would say very little chance. But you can see quite clearly that this indicator for the 5th time has proved accurate and hasn't actually let anybody down yet. So what happens now? So our journey basically continues now. So at the moment, as you can see, they are actually separated. So sooner or later, in the next 2 to 3 years, if we have a look over here, around 2025, what we can expect in the next 3 years is that this line is going to obviously start going like this, somewhere like that. And this is going to come and actually cross somewhere over here. So anywhere around the end of 2025, once these cross, that will be your signal to actually get off the market. And because nobody knows the future, that would be our best guide based on historical context of how this indicator has actually behaved. So in simple layman's terms, if you follow the 8 EMA and once the pi cycle crosses over, then you can actually say with a very high degree of probability based on a historical evidence, and this indicator has never let us down, we can then get off the bull market. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. If you want to make any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.